Good morning. All right. Charts. Gotta have charts. Okay, Wednesday. Yeah, I saw interest rates going back up. Ooh, market scared. Anyways, so Wednesday, MT Live at 12 o'clock. Don't forget. And 0 data expiration. So markets are heading down here. And we'll get to the futures, but NASDAQ week just broke through some intraday support. Russell sitting on some support, Dow on support, and S&Ps broke some support and hit the next support. So the upside could be a no-brainer. And let's see what the juice will be, but might need to get a little close. But since this is dropping, and we'll take a look at spiders and the futures. But 3,900 and getting above that, you can go 39.15 and 39.20. So I don't know what the premium is going to be there. 39.20. Right. This is updating. Yeah. I have to go 39.15 for that, whether you wait for the bounce or not, which probably I think will bounce at the open, just because of the location of where the futures have dropped to into support, and it's been a pretty steady drop if you're looking at, say, a 30-minute chart straight down there. Downside, 37.80 is exactly what I have written down. 37.80 and 37.80. Why did I write down 37.15? That doesn't look right. 37. That'd be nothing. I probably 37.75 is probably what I meant to write. Looks like so you got this shelf of support here. 3,800's got a big open interest. So you got a whole number. You got that open interest there. And then, of course, leaning against this, it'll bounce up. You've got an unfilled gap down there at 37.80. So odds are, right, if it goes down there, it's going to bounce back up again. So you might wait to see if it continues to drop, put on half a position, little whatever. It may not even get there. It's been in more of this trading range. We got the inside day that was anticipated yesterday. So, some more running in place. That's why I titled YouTube there, Frog in a Blender Pattern, because this is just, insanity. And, this made sense, drop down toward the 50. It's surprising it didn't hit it. So that tells you that there were orders sitting above anticipating the move down there. And it's a little bit more aggressive buying. It did drop quite a bit. Then it bounced all the way back up and all the way back down, right? All the way back up. And then yesterday's inside day, right? What happened at 5? Oh, I don't know. What caused it to drop, Steve? 39.20. Yeah, that's why I got written down 35.20, and there's some at 39.25. So smaller, less, of course, but closer to a guarantee of getting the money. So you got this resistance, and you got this next resistance, which, so when you say, well, maybe it could go up there, maybe it could, but the next levels of pivots are right there. So I don't think it's getting through there today. So I think it's a pretty good bet. And down here, I think is also going to be a pretty good bet. But let's keep an eye, as we will, on interest rates today. If they start spiking, it'll probably bring down, the markets more. but I think this will hold. So there you have it. All right, let's see where things are at. Let's just look at spiders here. All right. Why? Oh, that's like, why isn't that moving? Because I click the transports. All right. So 33.85, gapping down under the red bar. Not a big deal. It was gapping down below a green bar. That's going to be quite a bit more bearish. Like this, gapping up above the red bar here, but gapping down from a red bar is almost like, yeah, that's expected. And so 85, really not that big of a deal, but it doesn't have a lot to stop it from dropping. But in that level here, same unfilled gap when we looked at SPX and the pivot lows. So it's been in a trading range. It comes down to the bottom of the trading range. Buyers should be there. We'll see what happens. Looking at the Qs, which are weaker. All right, big red bar yesterday, engulfing bar, call it whatever you want. Small, big red bar. It got above the highs and it couldn't get through that, which would say, well, something's wrong, right? But putting it in perspective of the drop, really not wrong, but when we pay attention, as we do, to the day-to-day price action and we see a gap up like this in a strong close, it's like, okay, that should go up the next day. And then putting it within the context of this head and shoulders pattern, which is starting to play out. And I wrote about that over the weekend. I think I mentioned it Monday, but here we have this pattern that, let me get the drawing thing out here. Real slow for some reason. You can see, right, pretty much textbook. And so as long as it doesn't get back through here, and we're getting this move downwards at 3.8, 316-ish, 316 down here, that's a decent sized gap. It's into this, this body where there's some support. But it would take a miraculous recovery like we've seen them. So not so unusual in this market, but to get back up into here. Good morning, Deb. He got up early. Seems less likely and more like this head and shoulders pattern is beginning to take a clearer formation. And so down here at 312, once that starts to break, you've got these pivots and this little pivot and this little pivot, but you have to start considering the possibility of, this measured move type of scenario. And that's how this head and shoulders thing is projected. Sometimes it works out that way, but, I'm drawing here. The 200 is down here. I suspect the 100, well, the 100 is right here. That's a 20 MA, is the same as the 100 on the daily. So that's at around 310, right? 310. Well, that's not going to hold if this breaks. So 300, and then below that, somewhere down here, if the bear case plays out, we'll see. And clear that up. So let's go to the futures, S&Ps. There's the drop, broke through some support there. So many times, this is the concept of the greater than 100% retracement, whereas prices retrace greater than 100%. In this case, it's bearish. It suggests it's going to go lower, right? But it often stabilizes and has a bounce of some degree. And we'll see how far that goes in the first, I guess 10 or 15 minutes or so. You can see how the stabilization began immediately as it broke through there. So will this hold? Well, we'll see. I mean, this is a larger pattern than these pivots. So then the question always comes up, what about this support? or if we're bullish and looking for prices to go higher, what about that resistance to the left? And you have to discount it. I recognize it, but you discount it doesn't mean it won't hold, especially if it was to drop real fast down there. It'll have a bigger bounce. But if this does retrace back up and hangs around here, right, lower half, right, in the lower half of the wide range bar, and then rolls over, well, you got this big topping pattern. And they say, well, which is the more potent, significant, reference point? Well, this supply is versus the smaller area of demand. So the theory is it'll go through it. Let me see what actually happens. Right? If the wide range bar, strong, but no support. So right now, things are coming in a little bit, but overall, as we all know, we got trading range going on here. Well, let's not get too excited about price moves of great degrees one way or another until things develop a little further. And Qs, right, we looked at the Qs. Here are the futures. There's the break. Right, there's really not much of anything to stop it from continuing to drop. YM, which has been still up a little bit, but the most crazy price action. Top of the range and at the bottom of the range. Look to the left. Right? No fancy tools needed. Right? Just turn your head a little bit or flip your eyes in the other direction. And we'll see how, this holds. Just thinking that this topping tail forming there, range expansion, it took out the high, so that's bearish. There was a peekaboo up there. And, maybe it comes down here. As things develop, we create a bias and look, well, this is bearish in the morning. There's no way. I want to short something that's fallen this far, this fast, and the next pivot is right there. So do I want to think on the long side? Well, based on the 5-minute chart, not really. But if I get a retest and failure type of pattern here, W, I just might for a scalp. And bonds are down again. Market's getting jittery. All right. We've been focused on this area for months. I guess maybe it's going to go to the bottom of it. All right. Back here, when we started talking about it, it had a wider area. Now it's just coming down there. It looks like maybe it's going to get right down to the bottom of it. And that'll really be interesting if it doesn't stop and reverse from there. Just looking at the 10-year here, you can see this is up, and that's not much of a pullback. So, if it spikes up here, logic says, hey, the markets are going to get scared again. And wow, if it gets through here, so we really could get some downside momentum picking up. And so the VIX, what should you do here? That you can see this is a chart that is a gigantic mess. However, you've got all of these pivot highs up here. So what you should do is set an alert at this first one and set an alert at that second one, because there's no need to pay attention to this during the trading day. To watch it, you can if you want intraday, but look, just set an alert there, because when your alert goes off, VIX goes up to a prior high, odds are there's going to be a short-term low. So let the computer watch it. And oil's up a bit, pulling back to the prior pivot low over there to the left. Right. Sentiment is still bearish. All right. YouTube's asking about sentiment. Let's take a look at that. I'm still not used to. I got all these charts set up. I can't wait to get back to the way things were. There we go. Now you can see scaling it. It's poked below this level. I showed you earlier in the week, historically, this is a bearish extreme, and it's been up here, but markets, been holding up, correcting sideways at this point in time. But there's been a little bit of a pickup in bearishness. These are still low levels. So there's plenty of gas in the tank as it relates to sentiment for this market to come down. And while this has come down to a bullish level, this has to be in alignment, and it's not yet. So, in the weekend letter, I spoke about, well, this is down here. We get a little bit of a bounce. Well, we got a little bit of a bounce. A lot of times it gets up to zero. Well, it has not, doesn't have to. So, look, if we do get that bigger correction, and this market has been defiant to such, but if it should happen, this coming down to around minus 300, and in no way do I think this is going to get down to 1.2 in this market environment. But these bands, if this pokes down under this band here and this is down below 200, we're going to start looking for buy setups, right? So wherever level that's at. Chris, this is just simply a total put call ratio with a 5 MA. That's all it is. I back tested it with my eyes over decades of information. And then I saw at times where, it got out of whack, so to speak, for better words. And I, tweaked these bands, which I've used for a very long time. You can set up the bands on your own charts. Simple. You plot a 100 MA. I've got it, invisible and not seen, a 100 MA of this 5 MA. And then this is a 10% envelope around that 100, and that's a 20% envelope around that 100. Works real well. And as markets adjust, these bands will go up. Or a bullish market, and it gets more bearish, they'll begin to drop. So there are bear markets where this will bottom at like 1.4. So having these adjustments around the static level has served well over the years. All right. And gold. Where's my gold? Gold here. Well, still dropping. Let's get rid of this. Breaking below support. And next one is down there. And silver just fell apart. Was looking great over here. So it's a big mess now. So just stay away. And transports we always look at. Still look great, but couldn't get through the pivot high. Gonna probably go down here, but they've got room to drop without really damaging the chart, which is fantastic. And let's just take a peek at Bitcoin, pull back here and see if it M tops there and makes new highs again. Right. All yours, Dan.
All right, good morning. Yeah, I remember into the close yesterday, we were trying to decide our bias for today, and I said down based upon the sell-off into the close. And then when I woke up, I saw the market's up. I'm like, all right, I was wrong. Let's see what happens through the day. It was a gap right here, 15-minute character, a lot of resistance, and that's a bearish pre-market. So yeah, let's look to do a zero call spread on spiders. So we got long and short positions. Some of the longs are coming in, but no alarms are going off other than an upside alarm. We have a put spread on dunking. So we'll tighten our stop, let that settle down a little bit at the open. Dish here. Dish, somebody told me that they were doing the deal with dunking. So that's up a little bit, but no pattern there. Hey, Neil, your drop down, please. I'm John Van Tuwen. When you say added again, Okay, it's getting a little pre-market pop. You know, I had this kind of as one of my permanent thumbnails. Keep an eye on it. And actually, I just posted in our Facebook group the 0 and 1 DTE call spreads from yesterday. You can go take a look at those. Thomas asking about Roku. Roku call spread. Under yesterday's low is fine. I just AMBA here, bottom right. I like the gap. If it can 30-minute high, I like this as a put spread. And I think I'm going to do, today we have MT Live on trading stocks under 10 bucks that are set up for explosive moves. And we've been getting a lot of these turns in this crazy market like this. So I think that would be a good time for that subject. So if this holds and it's gapping over this red bar, then it's a beautiful turn in an uptrend. So that's here in the bottom right. That looks fantastic. Shop, somebody emailed me saying, hey, Dan, why is the volatility so high? I'm like, I don't know. It's a volatile animal unless there's pending news. Today's Wednesday. If it can get over Monday's high, that's a put spread idea also, right? And it's another example of a turn. It's not a great one for a directional because of the gap down. The most beautiful one that we've had here was this. We took our profits on the put spread into strength yesterday. But this is a El Fuego beautiful turn right there. Range expansion into the gap fill off the 50, 2 red bars ignored, closing at the high, gapping over. Beautiful. Let's continue here. XL. Some of these blockchain stocks are in action today. So here's a turn again, but it's a turn in a downtrend. So you're just riding the elevator back up a little bit, gapping the 17 bucks here. Maybe that might give you a day trade. Mara is a bullish gap, 38 bucks, but nah, it's retracing a little bit. Mara and Riot go hand in hand. If Riot can get over yesterday's high, I like that. Let me set an alarm at 57, because then it'll be red bar ignored. And Roger, that's another example of a turn, right? Turn at the rising 20 with a small little bull island reversal. So over yesterday's high, I like this one, both for stock and option trade. I'll set an alarm at 56. 56, just to get a little advance notice. Norbert asking about Lyft. 59.34. No, it's gapping right to, well, right. Oh, I take that back. It's gapping to the top of the range. So 30-minute high, maybe. 30-minute high had an explosive move down here, and it's multi-week. Yeah, we'll keep an eye on Lyft. UWMC, yeah, that's another toy on the Reddit boys. And we were short a put spread on Rocket Man, and we took our profits, and I said to our advisory letter way down here at 22, I said, let's watch this for a core trade breakout. And people have been bombarding me with the Reddit news yesterday, and I'm like, folks, tell me yesterday, tell me on Monday, because I love getting in the wake, if you will, the wave I'll call it, of these Reddit boys with high short interest. I didn't know this when I had high short interest, or I would have been a lot more aggressive. Those two things, high short interest and Reddit boy toy, we will push the throttle on those because we can use our chart analysis to get us in at the logical spot. UWMC, does it look higher? It's in a downtrend and it's gapping way the heck up here. So using our approach, there's absolutely nothing to do there. You know, there's no setup. There was on Rocket Man. Slug, never heard of this guy. But I posted this, that look, here's a monthly big bottoming target 758, but now it's moving too much. Now it's moving too much, but Slug looks like a bottom. LVS, selling some hotels in Vegas. That's gapping up. A nice 180 reversal on the monthly. We were watching Win for a while. So Win, that Win is nice. Facebook call spread. Yeah, I mentioned that yesterday. So 30-minute low. Yeah, 30-minute low. You know, we market oversold pre-market here. And I see on the 5-minute Qs. 5-minute Qs is a double bottom, new low plus. See, so that's exactly actually what Greg said before he turned over the mic. Greg said, should I be thinking long? And then he said, well, not really, unless I get a retest. And here you go at 9:29 a.m. So it's still bearish. It's very bearish on the daily after that bearish engulfing. But the main point I'm making here is, you know, let's be careful on new shorts right now with the gap down. All right, Riot, we looked at. I got an alarm. HZON. I don't know what's going on there. It kind of looks like a buyout. Gel for long. We talked about this one yesterday, and I said you could do it with a big stop because I like the monthly. But if it's a swing trade, you know, it's up 10 days in a row. That's not the time to get on a swing. Can gapping over a red bar. This ain't bad. I'd rather buy can than gel. See if it holds right here. Give it 5 minutes, maybe 5-minute high. I like kind of the bear sandwich on the weekly. I like the gap over the red bar. It's at resistance, but it's a bullish pre-market. That's